Good morning. It is Thursday, September 18th. I am Zach Howard. Here is my morning market update post central bank policy parade yesterday. Or I as look at it a different way. It's actually the heist by the central bankers of the purchasing power of the people that is celebrated with the media, and all that is that orchestrated theater with the question and answer press conference that is it's just a joke. It's definitely just a joke at this point. The same people get to ask the same questions over and over again, and there's no real holding these guys to any policy mistakes they've had and the flip-flopping they have back and forth. But let's dive into what this whole theater is yesterday and what the announcements were. As expected, we talked about both the central bank in the US and Canada would cut rates yesterday, both as the market had previously priced 25 basis points. So no surprise. Policy rate now in the US down to 4%, 4.25. The Fed is flip-flop on their policy. They want to have stable inflation, stable employment, yet inflation is actually accelerating. Core inflation at 3% when their stated goal is 2%. They're never getting to 2%. The new baseline is 3%, that they are officially saying they're going to steal money from you because of that policy. Inflation needs to go up 3% every year, and they're okay with that. Job growth is slowing from the statistical errors or whatever. It's still the policy is cut rates into slowing economy, increasing interest rates, increasing inflation. That is stagflation. One governor, Stephen Moran, I think he is trying to be the next Fed chair. He lobbied for 50 basis points cut. He was the only descendant outside of the rest of the committee that voted for 25 basis points. So we are on the new phase of the cutting cycle. When these central banks start cutting, they continue to cut. They don't just stop one and done. If history is any guide, we are at stock markets all-time high, gold all-time high, hard assets all-time high, and they are cutting the interest rate, which is basically acceleration of the debasement of the currency through this channel. This is what it is. It's a theft of purchasing power. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Well, I don't know about that, but that is the talking head that is Powell, and that is what he said at the press conference. We can see here the trend is clearly inflation rising, job growth declining, interest rates now declining, along with rising inflation. So what are we looking for? This is really, like I say, it is a wealth compensation via the central bank of the purchasing power of the people, celebrated by the media. I look at it as a bunch of gangs going up and down a neighborhood, looting the houses, and the next day that same gangs being put in front of microphones with their suits on and being celebrated for their actions, and actually asked how was the analysis about how do you actually go into breaking into the houses and what items do you look to take. That is exactly what this press conference is when you roll back the BS of it all, of this fake old fiat money Ponzi. And it really fits. Who's benefiting from this? Anyone who owns assets. 10% of the population in the US make up 50% of the spending. Those who have more spend more. Those who have less are going to have less again in this backdrop. The only way to stay ahead in the following debasement of the purchasing power of that fiat is to own assets. You can't expect labor to work hard to keep up. And that is going to be a continued theme as this plays out, particularly with a Trump administration and saying they want to have more of this. Stock market all-time high, real estate all-time high, gold all-time high. That's what I see on the agenda, and weakening fiat money across the board. On to Canada, same thing. Bank of Canada cut rate as expected. Canada has some real pressure, though, to keep cutting more than the U.S. because of that slowdown in the residential real estate market, particularly in the condo market of Toronto and Vancouver. Severely under pressure for some big financial positions there. So they're going to try to be easing. What we're looking at here is CORA, stands for it's the alternative of the SOFR in the US. It's the Canadian dollar offered rate, basically overnight rate that correlates with the Bank of Canada rate to give an idea of where the Bank of Canada rate is going, we can kind of look at Cora as a guidepost and where it's been, where it's to. As is the case in the US, the Central Bank of Canada owns a lot of the government debt, not quite the extent, but the Canadian government has 1.44 trillion in debt on its balance sheet. The Central Bank of Canada owns 12.6% of that debt on its balance sheet. So it's been a facilitator of running these deficits over and over again by the government of Canada. It doesn't matter who's in charge of the government. There's a gap in terms of who in the private sector wants to fund those bonds and buy that debt. The Bank of Canada steps in, and they have currently roughly 182 billion on their balance sheet from over the last few years, especially with all the quantitative easing we've seen in 2020, 2021. Good chart here of when the Central Bank of Canada first started its cutting rate cycle. Kind of took it easy here. We're back to the races here again now. In March was the first one. Just had another one. I would expect they have another two to end 2025. Good news for people who are trying to refinance their mortgages in the next 6 months. You're going to have lower rates. Good news for people that have low loan to value in their properties. They're going to continue to inflate with this backdrop. And you're looking at the money supply in Canada since September 2023 to September 2025. In 2 years, $2.47 trillion to $2.72 trillion. So basically an increase in the money supply, 254 billion, watering down the existing value of shareholders of that fiat money in the last 2 years of that equivalent amount. No better way to look at that than through the price of gold in the Canadian currency. I like to say it's not that gold is going up, it's that CAD is going down, and its backdrop from 3,700 Canadian dollars to start the year to now over 5,000. Onto Bitcoin, which is another alternative to this debasement theory backdrop. Besides gold, inflows into the Bitcoin ETFs over the last week have been really solid, except for a down day yesterday, which I would expect to had more price action into Bitcoin. Roughly here now, like 117,000 US on Bitcoin. But these inflows, I would expect to kind of push it up a little bit more. I think partly the reason why it hasn't is this basis trade, if you want to call it that, from the institutional level. Bigger hedge funds, people playing it from the standpoint of they are buying the IBIT over here, the largest ETF in the Bitcoin space owned by BlackRock, and then they are shorting the futures to play that premium, if you want to look at it that way. So I think that's probably kind of capping some of the space, big movements, and the slowing of the buying of the treasury companies is definitely played into that as well. A lot of these treasury companies are really falling hard the last 2 months with competition from Ethereum treasuries, Solana treasuries, whatever your next altcoin treasury is. Bottom line is flows have been taken from the space, and there's a lot of these companies now, 1 in 4, basically trading less than their underlying value of the Bitcoin they hold on the balance sheet, which to me sets up for merger and acquisitions in the space. Some of these companies are vulnerable, are going to be taken out at discounted prices, and they're going to reap the rewards for those purchasers of those assets, I think, in the long term, once Bitcoin continues to go to all-time highs, which I think into the back half here of 2025. Bitcoin strong, the treasury companies is not so much at this point. The treasury companies significantly higher beta than the underlying Bitcoin. What the thesis is, the debasement of the currencies is not going to change. If anything, it accelerates from here. Back to this chart, all you got to do is ask yourself is, do you think the government is going to be harder on its citizens in terms of austerity in the next 12, 24 months? Where does this chart go from here? If anything, it just continues its trend higher with some consolidation. I would not be surprised to see $6,000 ounce Canadian gold within 6 months. That's what I got for you. See you soon.